So I'm going to go ahead and kick this off. My name is Dave Pheteplace. I'm the Vice President of Bishop & Associates. Bishop & Associates is a company that's about 25 years old. We specialize in market research in the connector and interconnect space, particularly in providing market statistics to both the manufacturers that are in the space and also to investment bankers and private equity firms. Make sure I hit the right buttons here. Okay, may not use this. First of all, we're going to take a look at what's happened over the last 10 years. It's been a very significant decade for the interconnect industry. Secondly, we're going to take a look at the automotive space in particular, and I'll give you some of the statistics from automotive, and then we'll finish up in looking at what we see projected for this year and beyond. Great, thank you. This looks at the year-over-year growth in the interconnect industry over the last 10 years. You all know we had a downturn in the cable assembly market in general in 2001 and 2002, and then of course again in 2009. Looking at this with a little bit more data on here, the red line is the worldwide GDP, and the blue line is the year-over-year change in the connector market. And you can see some tracking here. You see a little downturn here. It corresponds to the downturn that we saw in 2001 and 2002. And then also you can see right here something that's rather significant is that the worldwide GDP dropped below zero. In other words, we had a declining GDP worldwide for the first time since I think it was in the mid-1980s that it actually dropped. And you see the result of that right here, in that we had a very significant drop in the interconnect market just in a one-year time frame. This one's a little bit more complicated, but basically the same thing. What I've done is taken the world, and then I've taken some of the different regions of the world and plotted the GDPs, and then along with the connector industry year-over-year growth. And you can see the correspondence there, particularly in the Western economies. The G7 are the 7 largest economies in the world by gross domestic product. And you can also see right here the major G7 and the Eurozone both dipped significantly on GDP growth in 2009. In the interconnect world, the growth tends to cycle about every 6 to 7 years. We'll see a decline in sales, and then we'll see a gradual increase in sales and replacement of the value that was lost in the market. And then in the 6th or 7th year, we'll see a downturn again where we have negative year-over-year growth in the industry. Now, some of this is just due to comparisons, because if you have a really good year, it's hard the next year to have a good year and year-over-year growth. But that's the way it tends to cycle. We also have found that the growth in the interconnect space tends to be 1 to 2 times the manufacturing GDP of a country. So if you have a country that has a lot of mineral exports, for instance, you can't just take their GDP. But economies that have a lot of manufacturing, generally the GDP is a pretty good indication. We saw a little bit of a new trend in 2010, and that is that we recovered all the value that we lost in 2009 in a 12-month period. So we started off at approximately $44 billion, for instance, in the connector space, and we lost quite a bit of that in 2010, almost 24%, and then it came back in 2011. Some of the things that have impacted the growth, the lead into this recession was really unprecedented. As I'm sure most of you are aware, the mortgage market crisis created value that didn't exist. That value was translated into investment vehicles, which turned out to be worthless. And so the people that paid for those investment vehicles lost all the money that they had invested. I think in an 18-month period, worldwide, the value loss was about $44 trillion. So almost the annual GDP of the entire world was lost in that 1 year. We also have ended up with a very large sovereign debt to GDP ratio. And this is partially due to countries trying to spend their way out of the recession that occurred in 2009. We have also seen historically high long-term unemployment. Long-term unemployment is defined as unemployment that lasts more than 27 weeks. Typically, at the end of a recession, you see that in the 20 to 30% range for a period of time, usually less than a year after the recession ends. In this case, we've gone on for 2 years and we're still running long-term unemployment in the 50% range. So it's a very significant impact on the markets in general. We're also seeing austerity budgets at all levels of government. Whether we're talking about a country anywhere in the world, in Europe and any of the Western economies, or whether we're talking about state and local governments here in the United States. There's been very significant cutbacks that have occurred. And again, this adds to the problem when government's not spending money, when government's laying people off, it ends up hurting the growth in the economy. And lastly, I'll bring up the historically low consumer confidence. In the U.S., consumer spending accounts for about 70% of our GDP, and that includes the purchase of automobiles. So when consumer confidence is low, the consumers tend to buy less, and consequently, there's less interconnect to be sold. I think it's telling me I'm talking too long between slides. The interconnect industry, despite the two major downturns that occurred over the last decade, grew 30% over that 10-year period, which equates to a compound annual growth rate of 2.4%. In the interconnect industry, the average over the last 30 years is just a little bit below 6%. So this decade did show from a compound annual growth rate not to be as good as the 80s and 90s were. The industry grew in value from $109 billion to $142 billion in 2010. Okay, now let's talk a little bit more about something you guys are probably interested in, which is the automotive industry. When you look at the global cable assembly market, the total value of it is $122.6 billion in 2011. About 26.5% of the market in 2011 was in automotive cable assembly and wire harnesses. And excuse me, I tend to use interconnect and cable assemblies and wire harnesses meaning the same thing, so don't let me confuse you on that. In year-over-year growth, automotive was actually the fastest growing market in 2011 at about 9%. That is automotive interconnect. And that was followed by transportation and industrial, which you would expect both of those to trail along with what automotive is doing. The other market that's still growing quite a bit is the telecom, datacom market, and that's because we all like to have our smartphones, which use a lot of data. So that goes into the sale of it, the smartphone, and then the infrastructure from Verizon and other service providers. They also have to increase that to handle all the data that's going through there. So that's why the spending was up in that area. In looking at the automotive cable assembly sales worldwide, about 38% of the value is consumed in Europe. So it's by far the largest region for cable assemblies consumption. That's followed by North America, which includes the United States and Canada, and then by Japan at 13%. And I'm sure as many of you are aware, China is very quickly catching up and will probably surpass Japan over the next year or two. So we started off with a market value of about $34.6 billion in 2008. We lost $13.6 billion in market value in 2009, and that corresponds also to a decrease of almost $29 billion in the overall cable assembly market. So it was a very significant event for the cable assembly industry. In 2011, the market recovered to $32.5 billion in sales. The interesting thing that happened, though, when you look at share of market in automotive cable assemblies in 2008, represented almost 30%, or I can even go further and say a third, to make it more dramatic, of the cable assembly sales worldwide. That has decreased to 26.5%, or a quarter of the cable assemblies worldwide. In looking at who some of the cable assembly suppliers are, some of them are those of you that are in the room today or you're closely associated with them. But if you look at the top 50 cable assembly manufacturers worldwide, the top 3 are in the automotive wire harness business primarily, with $25 billion of combined sales, representing 77% of the automotive cable assembly market. If you look at the top 10 companies, 7 of them have some or all of their sales in automotive cable assemblies. And if you look at the top 50, you have 18 companies that have some or all of their sales in automotive cable assemblies. So who are they? Well, they're all people that you guys know. Yazaki, Sumitomo, and Delphi are the 3 largest companies out there for manufacturing cable assemblies. By the way, if any of you are trying to take notes at the end, if you'll give me a business card, I'll give you a PDF of the presentation so you don't have to scribble too much. The next company on the list is Foxconn. Some of you may be aware of them from the press that they've received recently for being the primary manufacturer of the iPhone and the iPad. They do about $2.8 billion in cable assembly business out of their company alone. Then you have Leone and Lear. Lear is predominantly wire harnesses and seating, but in the electronic side, it's in automotive. Leone is a mix. They have automotive business, but they also have telecom, datacom cable assembly business that they do. TE Connectivity is a very large supplier to automotive in connectors, but they are not a large supplier of automotive cable assemblies. Most of what they're doing is in other spaces like industrial and medical cable assemblies. Then you have 2 Japanese companies. You have Fujikura and Furukawa. They both are predominantly automotive cable assemblies, but they both also produce telecom and datacom type cables, particularly in the fiber optic area. And then the last company on the top 10 is Safran Labanal. It's a French company that you may not have heard of before, but they're one of the primary manufacturers of wire harnesses for both Boeing and Airbus. Now looking at the top 10 automotive cable assembly manufacturers, that's pulling up the next 3 on the list. We add Draxelmeier Group out of Germany, doing about $1.1 billion worth of cable assembly business. And it's a pretty specialized business, as is Kronberg and Schubert. They're an Austrian-based company doing about $900 million in cable assemblies. And then we have Kyugyun Corporation out of Korea, which is about a quarter of $2 billion in cable assembly sales. Some of the drivers out there in the market for the cable assembly business. Obviously, the volume that's being produced by the automotive companies is a big driver in the market, and that's very dependent on the economy and what's going on in the economy, and that's why I spent some of the time that I did at the beginning of the presentation talking about that. The other things that we see going on, obviously there's a big increase in electronic content that's going on in automobiles, and that's everything from the infotainment systems that they're putting into the dashboards in cars to the safety systems such as the collision avoidance systems. And then lastly, we had the aging of the fleet. One of the presenters this morning mentioned that back in the 1960s, the average age of a car was 5.2 years, I think is what he quoted. We hit a new record in the automotive industry in July of 2011, where the average age of the car out on the road in North America reached 10.8 years. And obviously, at some point, that car is going to stop working and has to be replaced, and that's the significance of that statistic. The outlook for 2012, first I want to share with you some information that Bishop collects on a monthly basis. We call it the Connector Confidence Index, and we poll executives in the interconnect industry each month as to how they feel about the present business environment in the industry. And these are the results that we've been getting back. As you can see, from about the second quarter of 2011, we have seen a drop off in the index. Anything that's over 50 is positive, but it's gotten down to the point where it's very close to that 50-point range, although we did see a little bit of an increase in the first quarter of 2012. I also wanted to point out, I didn't do the whole list separately, but we do it by regions of the world. And Europe is the only country that's been consistently negative in this index for the past several months. As you can see, at least in the last two quarters, at 24.5 and 30.5 on the index scale. This is the same type of information, but we asked the business executives to look out and tell us, what do you see 6 months from now? Are things getting better? Are they getting worse? What do you think? And basically, what we're seeing here, the dotted line is the average of all the responses, and the average is going up. People are more positive about what they see happening going out 6 months from now. The only exception, again, is in the Europe and the Eurozone. We still see quite a bit of negativity in looking out at what's going to happen, and you're all aware of the things that are going on in the market right now with Spain and Greece and the situations there, and that's all dragging down the outlook that these business people have on the market in Europe. In looking at year-over-year change in growth by quarter, you can see that we started trending down from the first quarter of 2010 in the growth. And some of this, as I mentioned earlier, is just, it's a more difficult comparison as the industry performs better. But it has been trending down, which is part of the cycles that we see in the interconnect industry. And coincidentally, the fourth quarter of 2011 and the first quarter of 2012 were both a year-over-year loss of 2.3% in change in the year-over-year sales. This map, or this chart, projects out what the IMF, the International Monetary Fund, is saying about GDP growth by region. And again, in China and in the emerging economies, we see rates that are between 5 and 10% is what they're projecting. If you look at the connector growth again, in 2010 we had a 23.6% year-over-year increase in the industry. That dropped down to 6.6% in 2011. We're expecting in 2012 for the year-over-year change in the sales, we expect a growth of about 3.5%. We had been projecting that it would be negative in the beginning of the year. It's a little bit more negative than we thought it was going to be. So it'll be interesting to see where it turns out at the end of the year. A lot of it will depend on what happens in Europe. In looking at some of the good signs that we see going on in the industry, interest rates are still at a historical low. You know, companies can go out and borrow money at very low interest rates if they can qualify for the loans. So that's positive for the interconnect industry. Employment improved slightly in 2011. I mention that because it's better than if it would have gone in the other direction. So, I mean, it's better than the unemployment getting worse, but it still is a positive that it's going down. If you look at the stock markets worldwide, most of the stock markets went up in 2011, so that's positive for the outlook that people have on the economies. And automotive sales were up significantly in 2011. That's a big driver in the economies of the world that produce automobiles. Telecommunications infrastructure was up, and Europe is actively working on solving their debt problems. The stuff that's down at the bottom of the cup after you finish your coffee, I'll mention the first thing that I said on the last slide, the sovereign debt crisis over in Europe. We still have to see how that's all going to play out. I think a lot of you know that Spain was given $125 billion euros or dollars, $125 billion by the European Union to help their bank crisis. But they're also having problems selling their debt, so they may require a bailout for their country also. So that's something that's concerning. We still have high deficit spending in the Western economies, and we all know that means one or two things. You either have to increase spending or increase taxes or decrease spending, one or the other, or both. We still have the high long-term unemployment. We have a stagnant housing market in both Europe and the U.S. In the interconnect industry, that's something else that we can track whenever there is a stagnant housing market. We generally don't get a good increase in year-over-year sales in the interconnect industry. We also have the social and political unrest in the Middle East. It's been impacting both gold and oil prices. Oil had been hanging around $105 to $110 a barrel until just the last couple of weeks, and I think it's still in the 80s this week, which helps. But that's something to watch. Also in the United States, we have a pretty contentious political environment going on right now in Washington, and that's going to equal little legislation getting out to help the economy. That's the sort of the deadlock we saw in 2011, and it's probably going to continue into 2012. We have some continuation of the low consumer confidence, predominantly in Europe. And we've also seen higher inflation rates in China and India. And the significance of that is the governments there have taken steps to try to cool things off. And partially as a result of that, we're seeing their GDPs drop. So by market sector, in 2012, we're expecting the automotive sector to grow at a little bit over 3% in the interconnect space. And that will take us to a market value of about $33.6 billion. And one of the things I like to point out on this slide is the fact that we're almost back to where we were in 2008 as far as interconnect value goes in the automotive industry. The overall growth, as I mentioned, at 3.5% gets us to a $127 billion interconnect market worldwide for cable assemblies. So that is the end of my presentation. I've got my email address up there if you're interested in getting a PDF of the presentation or you can give me a business card.